If you're selling taxable goods in Colorado right now without a resale certificate, you are more than likely leaving money on the table and honestly exposing your business to some pretty massive legal risks. So, in today's explainer, we're going to break down exactly how to secure this absolutely critical document. We want to help you protect your business and, of course, maximize those profit margins. I mean, really think about it. Are you paying double tax on your inventory? If you're buying goods to resell and you don't have the proper tax documents in place, you are literally bleeding money by paying unnecessary taxes up front. Plus, you're opening yourself up to massive audit liabilities down the road. The whole system is set up so that sales tax is only paid once by the final consumer. If you pay it at the wholesale level and then turn around and charge it again at retail, you're just artificially inflating your costs. To get you fully compliant, here is our roadmap for today. We'll cover 1. What is a resale certificate? 2. Step-by-step application guide. 3. Common mistakes to avoid. 4. Verification and compliance tips. 5. Frequently asked questions. And 6. Conclusion and final takeaways. All right, jumping right into Section 1. What is a resale certificate? A Colorado resale certificate, which is officially known as Form DR 5002, or the Declaration of Wholesale or Entity Sales Tax Exemption, is an official document issued by the Colorado Department of Revenue. It basically allows businesses to purchase goods intended for resale, or even raw materials that will become part of a product you sell, without having to pay state sales tax upfront. The crucial point here is that this prevents double taxation, which keeps your prices highly competitive and your cash flow healthy. Now, this slide brilliantly illustrates a distinction that trips up a lot of new business owners: the difference between a resale certificate and an exemption certificate. You use a resale certificate, the DR 5202, specifically when you're buying inventory you plan to sell to a customer. On the flip side, an exemption certificate, like the DR 0715, is strictly for qualified tax-exempt organizations, like schools, government entities, or 501c3 nonprofits, when they're buying items for their own operational use. Here's a really interesting quirk about Colorado. To even use the DR 502 resale certificate, you first have to hold an active Colorado sales tax license. In fact, Colorado doesn't even issue a standalone resale number. Your 8-digit Colorado sales tax license number actually functions as your resale certificate number, so you literally cannot have one without the other. Let's move on to Section 2, Step-by-Step Application Guide. So, it's basically a 3-step process. First, you apply for the Colorado sales tax license using Form CR0100. You can do this online or by mail. Second, once you actually have your license number, you download and fill out the DR 5200 form. And third, you simply hand that completed DR 5200 straight to your suppliers. That's right, you do not submit the DR 5200 back to the state. You just keep it between you and your vendor. But before you jump online to mybiz.colorado.gov or start filling out the paper's CR0100, make sure you have all your info ready to go. You're going to need your federal employer identification number, your business address, and your projected monthly taxable sales. You also need to be ready for the costs. Currently, it's a $16 fee for a standard 2-year retail license plus a $50 deposit. But the good news? That deposit is automatically refunded once you collect and remit $50 in state sales taxes. Now, if you decide to bypass the online portal and apply in person at a taxpayer service center or through the mail, pay really close attention to the strict application instructions. You absolutely must provide valid proof of identification. We're talking a clear, legible copy of a Colorado driver's license, a U.S. passport, or a military ID. And note this little detail. If you send a courier to drop it off for you, they have to bring a photocopy of the valid ID of the owner or officer who actually signed the application. All right, Section 3, Common Mistakes to Avoid. Okay, the biggest trap business owners fall into is trying to use their resale certificate for internal purchases. For example, a restaurant cannot use a resale certificate to buy dish soap tax-free. Why? Well, unless you're serving those suds to your customers as a main course, you're consuming that soap, you're not reselling it. New desks, computers, operational supplies, none of these are tax-free. The items must strictly be for resale in the ordinary course of your business. And misusing this certificate is not just a slap on the wrist, guys. If you make fraudulent statements regarding your tax-exempt purchases, you can face some severe consequences. We're talking about maximum penalties of 18% on the unpaid taxes, a Class 2 misdemeanor, or in severe cases of fraud, a Class 5 felony. So the absolute crucial point here is always use sound judgment and only claim exemptions on true resale inventory. Let's get into Section 4, verification and compliance tips. If you're the vendor in the scenario and a customer hands you a DR-52O, you have a legal obligation to verify it in good faith. And, more importantly, you must keep a record of that properly completed document for at least 3 years. If the Colorado Department of Revenue ever audits you, this piece of paper is literally your only proof of why you didn't collect sales tax on that transaction. The burden of proof falls entirely on you, the seller. To make sure your resale certificate remains valid, whether you're the buyer or the seller keeping track of your clients, you really have to understand the renewal cycle. Standard retail sales tax licenses in Colorado are valid for a 2-year period. They universally expire on December 31st of odd-numbered years, which means you have to renew them in January of even-numbered years. If your underlying license expires, your resale certificate instantly becomes invalid. Moving along to Section 5, Frequently Asked Questions. One of the most common questions we get is, does Colorado accept out-of-state resale certificates? This table breaks it all down. Yes, if you're an out-of-state buyer without a physical presence or nexus in Colorado, a Colorado vendor will generally accept your home state's permit or the Multi-State Tax Commission's uniform form in good faith. There is one major exception, though. You cannot use the multi-jurisdiction form to claim an exemption for the resale of taxable services in Colorado. Also, if your business is booming and you're expanding, listen closely to this one. If you operate 2 or more distinct physical business locations in Colorado, you are legally required to obtain a separate sales tax license for each one. You can't just blanket your entire franchise with a single location's account number. And finally, Section 6, Conclusion and Final Takeaways. Obtaining your resale certificate is absolutely your best solution to legally avoiding double taxation and maximizing your competitive pricing. Just remember the core steps we've talked about. It strictly requires an active Colorado sales tax license first. You can easily apply for that via mybiz.colorado.gov. Once you get your number, fill out Form DR-5002 and give it directly to your suppliers. And if you are the one selling wholesale, retain those certificates for a minimum of 3 years to protect yourself in an audit. Quick reminder, while we absolutely love breaking down these complex topics into easy, structured visuals, this explainer is strictly for educational purposes. State tax laws are nuanced and they can change. You should always consult a qualified tax professional or CPA for personalized advice that's tailored specifically to your business's unique needs. Well, armed with this knowledge, you are no longer in the dark about Colorado sales tax exemptions. It's time to take action, get fully compliant, and set your business up for sustainable growth. So I'll leave you with this question. How much of your hard-earned capital is sitting locked up right now in unnecessary double taxation?